Hello, my name is Amy, and I'm in the Financial Empowerment Department at Summit Credit Union. Welcome to our session, A Guide to Home Readiness. When you're thinking of buying a home, present or future, we know it can be difficult to know what steps to take and to know if your home buying experience is something that's right for your budget. This Guide to Home Readiness session is going to help you set yourself up for home loan success. We're going to give you the information that you need to better understand and take into consideration the things that you can do to prepare your finances as well as to be prepared for that mortgage loan. So let's get started. Summit Credit Union is a not-for-profit financial cooperative. We strongly believe that financial success happens together. And we do that through financial coaching at our branches. We do that through sharing tips, tools, and advice through sessions like this. And we do that with our overall philosophy of financial wellness. So we hope that you enjoy this session today. There are three things that we wanted to share with you today. Number one, we want to help you determine if home buying is right for you. We want to help you learn how to prepare your finances. And we're going to give you next steps once you feel that you are ready to get a realtor and a mortgage lender. So how do you know if home buying is right for your lifestyle and for your budget? It can be a really big expense taking on a mortgage loan, taking on your property taxes, taking on the private mortgage insurance, and the other expenses that happen when you get a mortgage and you have a home. People will sometimes say that you're going to stay in that house for some 30 years, you're going to pay that off, you're going to sell it, you're going to downsize, and you're going to move to your next home after you've retired. But so many of us now are getting starter homes, and sometimes we're even buying 2 or 3 homes in our lifetime. So it's really important to understand how a mortgage and having a home can really help you build equity and help you get to other dreams that you have in your life. So let's talk a little bit more about that. One of the first things that we like to do at Summit is talk about how financially well you are. At Summit, what we do is we strongly believe that financial wellness ties to all the other wellness categories in your life, whether it's social or career or occupational or emotional wellness. Everything that you do ties to your financial wellness. That means that if you have money in your savings account, do you feel like you can pay for your current and future obligations, that you have a sense of safety and protection? Or are you financially stressed out about your financial situation and taking out a mortgage might just be too much for you? So 3 things to think about when you're thinking about your own financial wellness is, are you saving? Now, that can be a really interesting conversation to be thinking about. It's a little bit of retirement, and it's a little bit of emergency expenses, and it's a little bit about saving for the fun things in your life. Number 2, it's, are you being prepared for your future? Which I talked about retirement just a second ago. It's really important to be able to, not be married to your house, not have so much of your monthly income tied up in your house that you're not able to do the fun things that you want to do in the future. And then it's also really important to think about for your own financial wellness. Are you a saver or are you a spender? Do you tend to put things on your credit card and then pay them off over several months, which can cost you a lot of money and interest? Are you accumulating debt where you kind of feel stuck? This is kind of a clue for you that having a change in your spending philosophy would actually help you allocate money towards that future home that is a goal of yours. And so sometimes it can be really hard for us to change our financial habits, but that saving and spending philosophy that you've had pre-home ownership is absolutely going to change post-home ownership, because a lot of your budget is going to change to home buying and home living expenses. So one of the things that I wanted to share with you was a little bit about our budget worksheet located on our website. If you just go into the search menu and type in budget worksheet, you'll find a worksheet that you can download. It's pretty special because it has a now column and a future column. Most budget worksheets actually don't offer this. They just have where your budget is now. What this budget worksheet can do, and it can really help you with your finances, is it gives you the opportunity to look at where you are now and where your budget might be if you look into the future when you have that mortgage. That budget worksheet is going to help you determine whether you're living paycheck to paycheck, whether you have enough money to save for all the things that you want and need. It's going to help you understand what disposable income you have and where that extra money might be going. And it will also help you learn, where do you currently spend your money and where can you reallocate it for those future homeowner expenses? So again, our Summit budget worksheet is located on our website at summitcreditunion.com. I wanted to talk a little bit about some of those hidden expenses that we have with home ownership. I think the first time that I bought my house over 20 some years ago, I was shocked at all of the expenses I had to pay for everything from boxes from the moving company to the moving truck to putting gas back in the moving truck to buying new furniture, buying some home decor, the installation of our TV and our internet and changing over different things like that. We now had a city water bill versus having our apartment complex pay for the water or having it inside our rent payment. So we really didn't realize how much we were paying for water. The energy efficiency of our first house was fantastic. The energy efficiency of our second house was not so fantastic, and we had to do some upgrades with that. Tech upgrades to the house. Our first house, we bought that before they had things like the Nest and the Ring and programmable thermostats and, water sensors in case your basement floods. All of these types of things cost extra money. New appliances, if you have bought a house that has old appliances, we just recently bought a stove for our home and it was $1,200. I couldn't believe it. I think the last time I bought a stove, it was like $600. Home maintenance costs, even if it's a furnace filter or water softener salt, all those types of things are just kind of those miscellaneous household expenses that kind of creep up and can really be big budget busters. The other thing is if you end up buying a lot that has a lot of trees, maybe you're going to need to buy a chainsaw or some other yard tools. If your yard is too big for your push mower, or if you don't even have a push mower, getting a lawn tractor. And then there might be some home improvement projects that you want to take on, like painting the house even before you move into it. And that can cost you a couple of $100s when you're talking about the paint and all of the supplies and things like that. So you really want to think about how much those things are going to cost you as you prepare your finances to have those new homeowner expenses. Sometimes we often get asked how much of your income, I should say, is spent on your mortgage. And the answer truly is it depends. I can't tell you how much of your budget you want to spend on your mortgage and all of the things that goes with it. But I think that there's definitely a transition from living in an apartment complex to having a home. There are a lot of trade-offs. Sometimes you have to get a bigger house because you have kids, but then maybe the trade-off is that you don't travel. You do a lot of staycations. And it's also important to really look at that current financial outlook. Pre and post pandemic, the mortgage market has been significantly changed. We have higher interest rates. Home values are higher than they have been in many, many, many years. And it theoretically can mean that people are going to stay in their house a lot longer than they were normally going to. And so you're shopping around trying to find the best house for you, meaning that maybe you can grow into it a little bit versus actually buying that first starter home and knowing that in 2 or 3 years that you're going to sell that. Um, the other thing to really think about, besides all of the things like the garden tractor and the, lawn type of stuff, is of course saving for that down payment. And it's going to be really important for you to go back to that budget worksheet, figure out how much of your disposable income or reallocated money that you can use to be able to pay for that down payment and save for an emergency and save for the fun things that you're trying to do now and save for that lawnmower, snow blower, shovels, rakes, all that type of stuff. So what we truly recommend is that you create a SMART goal. It's a specific, measurable, attainable, realistic, and time-bound goal. We also recommend that you use automatic transfers from a savings or a checking account directly into a savings account that you have set up specifically for your down payment and specifically for either moving expenses or other things that you want to do to that home once you purchase it. Super easy to open up a savings account online, and then name it anything you want. And then also, for those down payments, I know that those are going to be thousands upon thousands of dollars that you're going to be saving. It's important to think about, can you open up a certificate of deposit? Can you open up a money market account? Not only to earn a higher interest rate as your balance on that down payment account grows, but it's also so that you can use other types of financial institutions, or excuse me, other types of financial accounts other than a savings account to be able to take advantage of that higher interest rate. One of the big things that we talk about at the credit union, we really, really encourage this, is to have some sort of home buying plan. It's going to be really important for you to be thinking about, obviously creating that budget, making some projections of what you think things might look like, setting those financial goals, and then moving money around so that you don't spend it. I highly recommend that you create like I said, a separate savings account. And I think it would be important for you to have a notebook, not only for you to figure out what type of home that you want and all of the things that you want to do for the home or the things that you're going to need to save for, but also just for you to be able to put down, those budget projections and things like that. So, developing that home buying plan, having that notebook, creating that budget, or creating a bunch of different scenarios is really going to help you along the way. So some of the things we talk about with our mortgage lenders is what information do you need to share with those mortgage lenders to be able to get your finances in order? Number one, when you go see a mortgage lender at Summit Credit Union or any mortgage lender, they're going to look for some paychecks, some pay stubs, to see what kind of income you are making. They're going to look at your account statements to see how many loans that you have, credit cards that you have, how many savings accounts you have, what are the balances in those savings accounts. And most importantly, they're going to be looking at your credit report. And you're going to be looking at your credit score to determine whether or not they can pre-approve you for a mortgage. They're going to be looking at, again, that credit score and that credit report. Now, you can get a copy of your credit report from annualcreditreport.com. You can go there, you can get it for free. You would not be getting your credit score. But when you do get pre-approved or pre-qualified, which is a little bit different than that pre-approval with a mortgage lender, they can start looking up your credit score and seeing what that might do for interest rates and loan programs that you might qualify for. Now, the difference between a pre-approval and a pre-qualification is the pre-qualification means that you've had that conversation with that mortgage lender, but you do not receive a letter that you would give to a realtor, which is the pre-approval letter saying, yes, as a financial institution, we have looked at all of your finances and we would grant you that loan. Now, there's something else that our mortgage lenders look at, and it's something called the debt to income ratio. So, of course, it's all the loans that you have, all the monthly payments, all those, terms and balances on those debts compared to your income. And there's a ratio there that the banking industry uses to determine your risk. So they're going to want to see all your debts compared to your gross income, how that would be affected by your new mortgage payment, and then see how balanced your budget is. However, they're not really taking into account anything other than these overall numbers. They're not looking to see how much money you're saving in a savings account and all of those types of things. So there's a little bit of a difference in how our mortgage lenders are going to approve you for a mortgage, but you might not be able to afford the amount that they can pre-approve you for because it might be over the amount that you're comfortable with in your mortgage payment and all the other expenses that you have to save for. You might actually want to buy a more affordable home so that not all of your home is that mortgage and those other expenses. One of the things that our mortgage lenders talk to us about often is that down payment and closing costs. Of course, you're saving for that down payment and of course, the rakes and the lawnmowers and snow blowers and shovels, but you're also saving for closing costs. Closing costs are things that are charged to someone who is getting a mortgage loan from their lender. It covers the admin costs of all of the paperwork, all of the filing of the official paperwork, because you are doing a real estate transaction and putting a mortgage and a home and the land in your name. And so closing costs are more than just the down payment. That down payment is the amount of money that you have saved so that you can put that towards the purchase price of the home, reducing the amount that you are actually going to need for that loan from the mortgage lender. So that's the difference between down payment and mortgage costs. We do have periodic home buying webinars, so check those out on our website as well. I think one of the things too that a future homeowner can remember, realize, do some research on, contact a realtor about, contact a mortgage lender about, is where is the housing market right now? Is the inventory of the market, meaning how many more homes are actually out there to be purchased, um, are driving the cost of the market. Are there too many homes for sale? Are there not enough homes for sale? Do you feel a sense of urgency to, get into a home because you've, released your apartment lease? Um, and all of these types of things affect the mortgage rates. And those changes could cost you significant amounts of money that you may not be expecting. Um, and it may hinder your opportunity to purchase a home now. And it's something to definitely consider when you're looking at your overall financial picture. But we have financial coaches at Summit, and our mortgage lenders are really educated in terms of how we can help you determine if now is the right time for you. So I've talked a lot today about everything that you might not be thinking about in terms of a guide to home readiness. We have talked a lot about kind of that down payment, the closing costs, what to think about, the importance of that budget worksheet. So what are some next steps? In terms of the mortgage process itself, I kind of hinted to the fact that you'll want a mortgage lender, that you'll be working with a realtor. It's important to research and select a realtor that you really feel comfortable with. It's important for you to take that notebook out and figure out, where might you buy, what school district, what town, how close or far away is it to work. We strongly recommend working with that financial coach and that mortgage lender to fully prepare your finances before you buy a home so that you don't feel stress and anxiety. When you get into that home, we want to make sure that you feel supported and you have some savings and that you're on the right path in terms of financial wellness, even if you are purchasing a big purchase like that mortgage lender. And then I hinted again about getting pre-qualified and pre-approved with that mortgage lender as well. So a couple of things I just wanted to reiterate before we end our session today. What you have learned is all of the tips, tools, and advice that we can give you on this short session about if home buying is right for you, whether or not you can use those tools to determine if now is a good time for you or not, what you all have to think about, what you're willing to put on credit after the fact, but most importantly, can you save the money ahead of time now so that you'll have less stress and anxiety of putting things on credit later on? How to prepare those finances, having that good credit score, having things saved up for that down payment, the closing costs, and all the things you're going to need, paint, shovels, rakes, all that stuff. And then knowing what the next steps is once you meet with that financial coach, meet with that mortgage lender, determine who your realtor is going to be, and then start searching for that home. Again, we do have home buying sessions on our website. You can check those out, and we do those in the evening periodically through the year. Just want to thank you for your time today. And if you ever need anything, you are more than welcome to email us at financialeducation@summitcreditunion.com.